Kurt with Huff Realty out of the Florence Huff office.
And I'm Sherry Regenbogen. Kurt and I are a team.
Hi, I'm Kaili Mccool. I'm with AmeriFirst Home Mortgage. I'm a loan officer there, and I've been there about 4 years.
Awesome. And this is through the Kenton County Public Library, the Erlanger branch. And we're going to go through how to purchase your first home. So if we want to, we'll just start off with the pre-made questions, and then people can ask questions as we go.
Sounds good.
So the first question is, what is the ideal down payment percentage?
So the ideal down payment is 20%. That eliminates private mortgage insurance for a buyer. So you get a cheaper payment. However, I know that's not always achievable on your first home. So I would say 5 to 10% down is the most common. First-time home buyers may also qualify for 3% down. So you have a lot of options. We just really want to look at the whole situation and make sure, you're not spending all of your money on a down payment. We want to leave a little bit in the bank for things like utilities, emergencies, furniture, stuff like that. So while 20% is the common ideal, there are other options that might work for your situation a little bit better.
Okay. What exactly is the first-time homeowner's loan? That might be like a terminology that people aren't familiar with or don't know that's an option.
Sure. So as far as a separate loan, there's no separate loan, but certain programs are geared more towards first-time home buyers. So as I mentioned, the 3% down, that's on a conventional loan. You'll get if you do what's called a home-ready conventional loan, that's specifically for first-time home buyers. You've got to have, decent credit, a good job. All of that has to fall in line for you to qualify. But you do get a little bit of cheaper mortgage insurance when you go through that program. So that helps first-time homeowners, as well as a couple other programs such as FHA that allows for 3.5% down. That has a little bit more flexibility on credit score. You can also have the ability to buy a manufactured home with just 3.5% down. So that's very achievable for first-time home buyers. There's another program called USDA. It's for rural housing. So the further you get away from Florence, the further you get away from Cincinnati, those areas are going to qualify for that. And that loan requires no money down. So it is a great program if you are looking in places like, Kurt, help me, in Kentucky, is Erlanger and Burlington, are those common USDA areas?
Burlington,
Burlington,
Petersburg,
Hebron, a lot of independents.
yes.
Yeah.
So yes, just like I said, the further you get away from the city, the better chance that you may qualify for a no money down loan, such as USDA, which is a great first-time homeowners loan.
That's interesting, because I had no idea about that if you go to certain areas, you could get a better loan.
Yeah, and that loan program is very affordable in my opinion. Right now, the interest rates on those types of loans are record-breaking low, so you're going to get a really great deal now. Plus, your mortgage insurance is going to be extremely affordable, probably about $30 to $50 a month on a USDA loan. So it is a great program.
That's pretty good.
Yeah.
Boone, Kenton, and Campbell County, all three have USDA eligible areas in them.
Great.
Okay. The next question is, how far over budget is too much? You always get, oh, that's fine, it's just a little bit over my budget, but what is too much?
So when it comes to qualifying a borrower, we look at your total debts versus your gross monthly income. So, what do you have going out each month and what are you bringing in gross each month? So typically we want to stay around or under about 41% of your gross monthly income. That's a good rule to have for your total monthly debts and your home loan included. So that's everything, including your house payment, your car payments, student loans, credit cards. If all of that is 41% or less, of your total gross monthly income, you'll be good within your budget.
Okay. What is the best area school-wise around this area? Because that's a very important thing when people come to purchasing homes is it near a good school? Is it near a good community? What are deemed the nicer communities around here?
Well, typically how we address that issue is we're not allowed to necessarily what's called steer a buyer into any one area versus another area. And so what we always refer to is the school report card. They can actually get on either the Boone County Board of Education's website, Kenton County Board of Education website, and they actually have, some rankings there and different statistics. So, we sort of have to let our buyer make the decision what they deem as a good school versus, maybe subpar or whatever. It's not our decision to make for them.
Oh, okay. That's good to know. You kind of let people steer themselves where they want to go.
Mm-hmm.
Oh, okay. Gotcha. If each of you had to say one thing that can be negotiated the easiest, whether that's like asking price, if this needs to be included, like appliances, anything like that, what would you say is the most negotiable thing with purchasing your first home? What's something that people should be looking to kind of wiggle with the people?
I would say as far as appliances go, it's normally complimentary to all the appliances to stay, but the refrigerator, but we'll always write in all the appliances currently in the home. Since the refrigerator is not considered permanently attached.
Personal property.
Mm-hmm.
Okay.
If it's personal property, then the seller can choose to or not to leave it. Typically, the stove, the dishwasher, things that are, a little bit more permanent are expected to stay, but washers and dryers and refrigerators, freezers, those are all things that are negotiable.
Okay.
Other things that you negotiate possession, how quickly you get to move in after the sale. Sellers will put in the MLS, which we will pass on to our client. This is what the seller is requesting. Now, that doesn't mean we necessarily have to give it to them, but it gives you an idea where their mindset is as far as how quickly they're willing to vacate the home once it becomes your home. So that's a negotiable item also. The pricing, it's just a really tight market right now. I wouldn't say that there's no negotiating on prices, but we're sort of at a historic time right now where there's probably less negotiating and haggling over price currently than we've seen in a long time. So.
Okay. Cool. What about mortgage-wise? What's something that you can negotiate on?
Well, as far as myself negotiating, I usually refer to Kurt or the realtor that I'm working with on that deal. But something that we always try to have the realtor negotiate into the deal is the closing costs, especially for a first-time home buyer. You're coming with your down payment, or you've got a lot of expenses that you're getting ready to incur. So we always encourage that you ask for the seller to pay for the closing costs, so if you're going on the outskirts of town and you're going to get that no money down loan, ideally you can get into the home with no money out of your pocket, which is ideal, right? That's great. So good realtors like Kurt, they can definitely help you negotiate the closing costs into the sale.
Awesome. Do you want to kind of go in what all is included in closing costs? Because you hear closing costs and you're like, well, what all am I actually paying for and all that?
Sure. So the closing costs are typically made up of all of the lender fees. So all of the processing, underwriting, originating, all of that good stuff, getting your loan, set in stone. It's also going to pay for the title work. So making sure that the deed gets recorded at the county, at the courthouse, making sure title gets transferred into your name, all of that title insurance stuff to protect you. If something were to happen 5-10 years from now, you would be covered. So things like that are included in the closing costs. You're also going to have things called prepaid expenses, which is your escrow account setup. So things like the property taxes and the homeowners insurance. Those are not technically closing costs, but those are also things that the realtor can help negotiate into the sale of the home. And those are other costs you want to be aware of. So I'd say typical homeowners insurance is anywhere from about $900 to $1,200 a year. And then, of course, the taxes will vary on the area that you're looking in and the size of the home. All those things come into play.
Okay, that's good to know.
I would say another part of the negotiation is we would always recommend you have a whole house inspection. And once that report comes back, then we'll come up with a repair addendum, and we'll kind of negotiate if there's anything that does come up on that inspection report that's affecting the livability.
That is also a good point. You don't want to move into a house that's falling apart. Very bad. Okay, so I know you said school-wise, you kind of let them go their own way. If people are looking for cheaper homes in this area, where's the best place in this area to look? I know that we mentioned like Hebron and those kind of areas, you get the rural area loans. Is there like a certain area that people who are like falling on a budget should look?
Definitely.
Yeah. I would say that there's a variety of areas all throughout northern Kentucky that have, pocket neighborhoods that definitely have, starter first-time home buyer areas. And I would really kind of go off of what your needs are. If it's kind of an area that's close, if you want to stay close to your work, or there's a certain school district that you would like to stay in. And then kind of go from there, looking around there to see if you can find something that's in that price range.
Okay, good to know. What is the biggest mistake people make when taking out their loans for their homes? Whether that be a first-time homeowner, whether that be not that, any kind of loan. What's the biggest mistake people make?
So my first suggestion would be to get the ball rolling with getting pre-approved and linking up with a realtor a few months before you are wanting to purchase. That way we can take a look at your credit, your income, your employment, your assets, make sure everything, all your ducks are in a row before you find that house that you love and you're ready to make an offer. So that's my biggest suggestion. As far as mistakes that can be made along the way, the biggest things are going to be opening up new debt. So let's say Kurt got you a contract on a home that you're absolutely in love. You love this home and you're set to close in 30 days. And on day 15 in between, you bought a new car. That could very likely be a deal breaker and hinder you from getting the home because you're now opening up new debt. So now that debt to income ratio we were talking about in the beginning is going to be higher. So you might not qualify for this home. So stuff like that, anytime you get your credit pulled, it's a risk that we try to advise our buyers not to take. Other than that, things that we advise people to stay away from is making large cash deposits into their bank account. We're going to want to see a paper trail of everything and make sure that everything's legitimate. So, you've got $10,000 stashed away under your mattress for a rainy day. That's great. But do not put that in your bank until after you close on the home, because especially with these first-time government loans, the government is super specific. They want to see exactly where everything came from, and they're not going to take your word for it. So my biggest suggestions are get ahead of the game. When you want to start looking, if you want to buy in the spring, let's talk about it now and see where you stand. And then other than that, any kind of move you make between now and purchasing, keep a paper trail of everything. Any receipts, any invoices, tax returns, you deposit your tax return, make sure you've got all that documentation, and that will really just set you up for success.
I think one thing that buyers are not necessarily aware of, they realize at some point that they have to talk to the bank and, get pre-approved. What they don't realize is we cannot present an offer for any buyer without that pre-approval letter attached to the offer. So they really put the cart before the horse, to start even looking before they have that, because number one, they don't necessarily know what price range they're going to be in until they get pre-qualified. It may be that they qualify for a higher amount, but that payment is scary to them, so they want to go below what they actually qualify for. There's just a lot that goes into that, but yeah, if you find the ideal house that you love and you were looking out of your price range, and now you've seen a Cadillac and you find out that you can only afford a newer Chevrolet, let's say, that can make it difficult. Plus, you're trying to replace a house that got away, and it was in a price range that, may not be achievable. So there are just certain steps to go through, and talking to Kelly first is a big one.
So everyone would agree that your first big step is getting pre-approved before you do anything.
Right.
Okay.
Yes.
Right.
Good, because a lot of people don't know the first step that they have to take to even get started on this. When I was starting on this, I'm like, I don't even know where to begin. Like, do I do my credit? Do I go find a house? What do I do?
Right.
So that's good to know.
One thing that Kurt and I do with our first-time home buyers is we have a home buyer consultation where we bring the client into the office. We explain to them how the process is going to work so that they start getting familiar with some of the terms that are going to get thrown out there at them. And then at that point, we say, now, go to your lender and let's get pre-approved. And then we'll meet back up once we know financially where's a good spot for you to be and what type of loan, because those are all things that we have to know before we write a purchase contract. They have to be locked into their lender so that we know what type of loan they're doing, because we have to write that into the purchase contract. We have to know if we're asking for seller concessions for closing costs or whatnot. So you have to spell out how much of a down payment is going in, on their loan. Those are all things that very specifically have to be spelled out in the purchase contract.
That brings me to my next question. How important is it to read your contract? This is pretty much a setup question, but is it important to read your contract?
Yes.
Mm-hmm.
Yes.
Yeah.
A lot of times without overwhelming the buyer, in our consultation, we sort of get a feel, each buyer is different. When they come in with a legal pad and the pen in hand, we know we've got someone that, is probably a little bit more prepared. Now, if we feel like we're not going to overwhelm them that first time, we may start actually introducing some of the documents to them so that, when they're sitting there with their dream home on the line, so to speak, it's not the first time they've seen or heard, of these different documents that we're going to be expecting them to sign. So it just depends on their comfort level, how quickly we start introducing, some of the paperwork ahead of time, so that, they're always going to be nervous. Everybody's nervous when they buy a house, but especially, your first time home buyers.
Oh yeah, it's nerve-wracking.
Mm-hmm.
What about from the mortgage side? Is it important to read your contract when you're making a big loan in your life?
Yeah, I would say some of the key things you want to look at, and Sherry and Kurt can probably throw in a couple more, are, your purchase price, your down payment, when are you picking up the taxes? So it varies from area to area when it's common for the seller to stop paying taxes and the buyer to pick up. Also, when are you taking possession of the home? if anything's included, any kind of personal property, like they mentioned, the refrigerator, washer and dryer, stuff like that. Those are like the key things I think that as a buyer, I get a lot of questions on. You know, we're almost to the closing table and the buyer says, when do I get to move in? I'm like, oh, I don't know. Let's look at your contract. So yeah, a few key points there. And like they mentioned, you know, they'll walk you through anything important or anything noteworthy in the contract.
So it's important to have a good relationship with everybody on your team is what I'm hearing.
Absolutely.
That's
Yes.
good. Yeah, because you definitely want to keep that rapport. You don't want to make anybody mad who's trying to help you buy a house.
No.
Okay. What is the best credit score for opening a loan? Everybody knows your credit score is very important in this. Where do you want your score to be at where you can start looking at getting pre-approved?
Sure. So I'd say we like to see 620 or higher. We've gone down below into the 500s before. We can make special exceptions. But as far as the most ideal credit score is going to be 740 or above. At that point, you are going to be getting the best interest rate. You're going to be getting the best mortgage insurance rate. It's really just, you're going to be getting the best deal possible. However, that's not to say that, you know, at a 660, we can't get you a loan, because we can absolutely get you a loan and, you know, make it work and fit within your budget. So it's less the credit score. It's more about what's on the credit. So let's say you do have a 585. Is it because there's collections on there? Is it because you paid your car payment late a couple times? Is it because your credit cards are maxed out? Because you had a bankruptcy? There's all kinds of things that we take a look at. Some things are more serious than others. Some we can make exceptions on, some we cannot. However, what I suggest is let's go ahead, take an application from you. Let's look at everything. If we can get you pre-approved that day, great. You're free to make offers and go see all the homes you want. If you're not pre-approved, we can put you on a plan 3, 6 months, 12 months from now to get you ready. So I always just recommend the earlier the better if you're considering buying in the next, 6 months or so.
Okay. Good to know. So what costs are usually included in purchasing a home? I know we talked about closing costs, trying to get those tied in to let the people selling take care of those, but what all is included? Because when you think of a house, you think, oh, I just have to pay a mortgage, and that's not true.
Mm-hmm. I would say the first expense would be your EM check, your Earnest money, and that's kind of a good faith. So once you submit a contract or an offer, you were submitted with a certain amount. Normally it's about, I would say, $1,000 per 100,000, ideally, and so that would be something that would be a up cost front before you close on the home. And then next, I would say inspections. You'd always get a whole house inspection and termite inspections. And those kind of run anywhere. It's kind of based off square footage. And they go from about 350 up to 500.
In
Okay.
addition to that, you want to keep your appraisal fee in mind as well. So it varies for the loan programs, but it's always going to be somewhere between $400 and $525, depending on your loan program. The 525 is on the higher end, and that's for VA loans. So not all borrowers will qualify for that. So if you're just looking at FHA, conventional, or USDA, you're going to be looking about $400 to $450.
Okay. So you're looking at least a couple $100 to even to like get it started and things like that aren't included in the closing costs, coming out of your own pocket, basically, with the inspections and everything else.
It's going to be more than just a couple $100.
Oh, well, like 500 plus. Sorry, I shouldn't have said a couple, like a good chunk of cash.
Yeah.
Okay.
So what they were talking about, go ahead.
Sorry. One thing about the Earnest deposit that you put down with your contract, that shows back up as a credit to the buyer at the closing as part of their down payment. So they don't have to have, the $1,000 deposit plus, 3% or whatever, that earnest deposit is part of that down payment. Does that make sense?
Mm-hmm.
Okay.
Yeah.
That's exactly what I was going to touch on too.
Everybody's vibing. Everybody's together.
Yeah.
That's good. What are red flags when you're looking at homes when it comes to like, oh, it's got a cracked foundation. Oh, there's no garage. Like, what are some of the biggest things that people should be on the lookout when they're looking at homes?
Well, one thing that I would say, and this is some things you just learn through experience. And this is one that I always pay a lot of attention to, is if I see like rust stains and stuff in the basement from like where cans were setting and stuff, and I look at the seller's disclosure form and they're saying the basement's never leaked. Well, I know that's not true because you don't get rust spots from where metal has set in the basement if the basement's not taking on water. So that's a big red flag right there. One of the other ones is, and it all goes back to that seller's disclosure form. People just want to buzz through that thing and not pay any attention and truly fill it out correctly. That's part of the, reason for the whole house inspection. But if I see water spots on the ceiling and then I look at the seller's disclosure and it says, does the roof leak? And they say, no, then the roof's never leaked. And I say, okay, well, what's the water, there again, what's the water stain up there? Oh, well, we just needed to replace the caulking around, the chimney or something. And it's like, but that was a roof leak. And you're not telling me about that. So what else are you not telling me about? And so, that's one of the reasons why buyers have agents, because our eye is trained to go to certain things and look for certain telltale signs, because sellers aren't always real forthright in giving information that they think will negatively affect the property. So you have to protect yourself.
Yeah. Well, that's good to know.
And that can be done through, number one, the inspection, and number two, a home warranty.
So these sellers have to fill out a paper that like basically explains like, oh, the roof leaks and all the negative things of the house.
What, negative and positive?
Oh,
Like,
okay.
it'll say, what's the age of the heating and air conditioning system? They list them separately. And it may be that the furnace is 15 years old, but a major part that's expensive has just been replaced. You know what I'm saying?
Mhm.
It's not so much that you don't expect anything to be on there. If this is an older home, I expect there to be some yeses on there.
Yeah.
Everything should not be no. You know what I'm saying?
Mhm.
That's sort of a red flag too. I expect that. The hot water heater went out, and water got in the basement because the hot water heater went out. I expect to see things like that. And the more things that I see my seller disclosing to the buyer, the more that this house has been well taken care of. This is a seller that's not trying to hide anything from you. Just different things like that.
Okay. Well, that's good to know too. I really only have one more question, and I'm going to throw it out there. The only other question that I had for you all is, what exactly is the Homeowners Association? You hear all about it, but some people don't know exactly what it is. What all comes with living in a home that is part of the Homeowners Association and all that?
So certain neighborhoods, they have established a homeowners association, and it normally varies depending on the neighborhood. Like I know at condos, the homeowners association normally always includes snow removal. Some things you might see in there is trash and sanitation, water. the pool house, landscaping, and then,
Exterior maintenance.
yep, and then all exterior maintenance, like the roof and siding as well. And each condo association is normally different. Some subdivision condo associations, the fees also vary as well. Some you'll see only be charged one annual fee, or sometimes it's a monthly fee. And the subdivisions, it normally includes the pool houses and then the landscaping around the entryways and
A homeowners association is designed to keep everything looking uniform. There are very strict rules about what you can do and cannot do. You can't move in and, for an example, paint your front door purple. They have very specific guidelines that you're expected to go by, and that property, you have so many days to read over those and acknowledge that you've read them, you accept them, and you're willing to abide by them. One thing to know is that some larger subdivisions that have single family housing, condos, they have different levels of housing. Some of those have a community-wide homeowner's fee that is paid once a year. And whether you're living in a single family home in that development, a condo, it doesn't matter. You pay that blanket association fee. Now, you also have one that's not your only fee, then you still have your association, your condo association dues also. So,
Oh, sorry, somebody walked in. You're
but the
good.
buyer, but I mean, there again, that's part of our job. You will always know if you're buying into a situation where there's more than one homeowners association, or if there's none.
That's good to know. This is all such helpful information. You need to know this because they don't teach you this in school. They don't run through this when you're going through your classes. So it's good to know, especially because people from all different ages are doing this. Like I'm in my 20s and I'm doing it, and my friend who's in his 40s is getting ready to do it. So it's a big variety of people.
Right, right.
So I don't have any more prepared questions. Is there anything else that any of you want to mention that we didn't touch on that people should know that's important?
I would just stress again the importance of getting pre-approved and the importance of using a realtor. I think there's a common misconception that buyers can't afford a realtor, or they're going to use the listing agent's realtor or the seller's listing agent as their realtor. So you want somebody to negotiate for you as the buyer on your behalf, and as a buyer you don't pay realtor fees. So there's no harm in having someone like Kurt or Sherry negotiate on your behalf and make sure you're entering into a contract that you're comfortable with.
And that's touching on that. Another thing that I would say is when as agents and as lenders, we recommend certain providers to you. It's not that we get anything from that. We're sending you to someone that is going to look out for your best interest, someone that's going to treat you fairly, that it is going to give you good service. You're not just a number to them. We're referring you to people that will take good care of you because we have a relationship with them. And that relationship is we work together deal after deal after deal. And we're recommending people that are competitively priced. It's the whole package. So many factors go into that. And to use somebody that you just hear off the internet or something like that, you're really gambling when you do that, because it's the old rule of thumb, guys. If it sounds too good to be true, it is. Lenders would go out of business if there wasn't some hidden, they're burying it in there somewhere. If someone's rate is that significantly lower, it's buried in that loan somewhere. You're just not seeing it. So that's, you
Gotcha.
know, yeah.
That's exactly right. I mean, we get all the time, well, you know, XYZ Mortgage sent me a paper in the mail that says they can offer me a 1.5 interest rate. I'm like, what type of loan is it? What's the credit score they're basing that on? What kind of down payment is that, you know, offer good for? What kind of home? There's all kinds of factors that go into those kind of offers. So just the importance of working with someone local that you can text at 8 p.m. on a Friday if you need to. You can call them on a Saturday afternoon. You know, someone that you can easily communicate with is key in these situations where there's a lot of money on the line.
Right.
Lots of money.
Yes.
Well, awesome. Nina or Michaela, do either of you two have any questions that we didn't hit on? We have a couple more minutes we can do.
I don't, but thank you all so much for being here and answering all these questions. It's very helpful.
Good. Thank you.
Yeah, thank you for having us.
Yeah, definitely.
Well, I think we answered everything we needed to answer. Thank you so much for doing this. Like Michaela said, it's very informative and it's very helpful. And everybody have a great night.
Well,
Thank you.
can we give the folks out there our contact information or?
Absolutely. Promote all you want. Absolutely.
Well, Kurt and I work as a team. We're with Huff Realty. The best numbers to reach us, there's two different numbers, 859-653-2809. And the other number is 859-814-4182. 4182. So that's our cell numbers. That's why my phone kept ringing while we were doing this. I mean, so just give us a call. If we don't know the answer to your question, we'll certainly find out for you.
Awesome.
And my number is 513-679-1045. And that's good to call and text. So all day long, anytime I can help. You can also do a quick Google search into, into your search browser, search for Kaili Mccool at AmeriFirst. You'll find my website. On there, you'll find the pre-approval application. If it's more convenient for you to apply online, that immediately kicks it to my email. As soon as I see that come through, I can take a look at everything and then I can give you a call and, work out the bugs and figure out a plan from there. So a lot of good tools on the website as well.
Yay.
Awesome. Y'all might be getting emails from me soon, so just be prepared. If
You got it.
Email, that's why. But thank you so much for doing this. Everybody, have a great night. Thanks.
Thank you.
Thank
We
you, guys.
appreciate it.